I hope everybody's having a nice summer evening. Very pleasant here in Pittsburgh right now. All right, today we have the good fortune of having Jeff Gibby with Metastock here with us. I got connected up with Metastock a good while ago because they've got a very efficient charting service. You can pretty much, I mean, it's the cutting edge on number one, and number two, dealing with the people at Metastock, they're about as nice a group to be dealing with as you'll run across on these internet type services. So with that, what I'm going to do is I'm going to kind of go through some of the things that we have developed. So obviously you're going to see some of my rhetoric with the charts. But then afterwards, Jeff's going to come on and show how they've got everything set up to where it will make finding the right trades much more effective and much more efficient. So with that, essentially what we're trying to do is basically try to put all the probabilities in alignment. And because we know there's one reoccurring factor in candlesticks, which is human emotions, that can be whether you're trading stocks, commodities, currencies, tulip bulbs, anything that has fear and greed in it, it's going to work very effectively. And essentially what we're doing is just we're putting common sense put into a graphic depiction. And the reason that candlestick analysis is so effective is because of one very simple element. It's all visual. You don't have to worry about formulas. You can set up the formulas to look for the things that you visually want to look for. And because there are some very simple rules, we can apply those rules to our scanning techniques. The Japanese rice traders made it very simple. They put in graphic depiction of what usually happens in human emotions, which basically boils down to where do most people buy. They buy exuberantly at the top. Where do most people sell? They panic sell down here at the bottom. And all we're trying to do is put the elements graphically where we can put the probabilities of being in the right trade at the right time. Fortunately, I tell people, and people argue with me about this, I was one of the worst investors in the world before candlesticks came along. And because of the chart aspects, or the visual aspects on a chart, it was easy for me to see what I was doing absolutely wrong based upon what the charts were telling me. And I was the person that was panic selling at the bottom and buying exuberantly at the top. And I was even a stockbroker for 8 years, so that should tell you something. So the first thing that makes the probabilities extremely strong is essentially the signals. And as many of you have known, out of the 50 or 60 signals, I've narrowed it down to these 12 major signals, which essentially, if you understand or not only recognize where the signals work, and you understand what the psychology was that created those signals, you have an extremely strong grasp of what makes prices move and when. So there's one very simple element that we also add to our charts, which is stochastics. And it boils down to that the Japanese rice traders say that if you see a candlestick buy signal in the oversold condition, more than likely you're about ready to reverse and go in an uptrend. Conversely, if you see a candlestick sell signal in the overbought condition, you're about ready to see a downtrend. Again, the probability is based on that. So we recognize the signals. I mean, we know what the dojis look like. And we also know that if you see a doji in the overbought condition, again, I use stochastics of 1233, that if you see an uptrend and you see them gapping it up in the overbought condition, which tells us there's exuberance in the overbought area, and you see a doji, it's time to take profits. If you see dojis in the oversold condition, stochastics below 20, it's going to tell you what that decision is after that series of indecision. It's usually going to be a very strong price move after that. So we have, again, the 12 major signals, a bullish engulfing signal, very simple to describe, that opens below the previous day's close and closes above the previous day's open. This candle body completely engulfs this candle body over here. Again, not necessarily the shadows, just the body. So whenever we can see that signal, that becomes a very high probability trade situation, especially when we can put other parameters in, such as being in the oversold condition, number one. Number two, closing above the T-line, and the T-line we'll get to here in a minute. But that tells us we're probably in a very strong situation as far as buying at the right time. There's always the question, where do you grab for the fallen knife? Candlestick signals point that out right where you should be buying and where you should be selling. Whoops, I think I skipped some here. Conversely, sell signals like the shooting star signal. If we see that shooting star, same scenario. Where do most people buy? They buy exuberantly at the top. There's messages that are given to us by these signals. Had this closed up near the top, that told us there was still a lot of strength in this trend. Closing near the bottom, creating a shooting star situation, gives us very simple rules. That if it opens lower the next day, we want to be out of this trade. And the other element, the further away we move from the T-line, the higher the probability we're going to come back and test it. So as long as we know what the signals are, and we know what the strongest signals are, like the kicker signal, just very simple. If we identify this, especially with a number of confirming elements. Now, I don't know whether we got some new folks on here tonight, but as you'll see, my charts are very simple. We've got the 200, the 50, and the 20 simple moving average on our charts, and that's because every major money manager around the world uses those moving averages to make decisions for their portfolio. This black line is the T-line. We're going to kind of work on the T-line crunch and how it creates some breakouts tonight. But very simple rule. If you see a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close back below the T-line. The nice thing about candlestick analysis is it tells us exactly what's going on in investor sentiment at important technical levels. I always refer back to not too long ago, somebody asked, well, how many days does it take for you to confirm the trend is reversed? And the answer to that is 0. If we see a signal and it confirms the next day, we're buying immediately, which does two things for us. One, it gets us in early on a price move. And two, if it fails, we got very small stop loss situations or the stop loss come out of that trade. So again, there's some very simple truisms, and the T-line truism is basically if you see a candlestick buy signal and a close above the T-line, you stay long until you see that candlestick sell signal and a close back below the T-line. Now this might seem very simplistic, but that's the benefit of candlestick analysis, is as long as you make this a simple analysis without all the other convergences, divergences, volume, anything that everybody likes to add, it's just visual. It tells you when the trend is up. It also tells you when you see a sell signal and a close below the T-line, you're in a downtrend until you see a candlestick buy signal and a close back up above the T-line. With the truism that the further away you move from the T-line, the higher the probability you're going to come back and test it. Makes it very simple. If you've got a nice big profit, and you start seeing indecisive trading, we have a simple rule of the doji. It's going to move in the direction of how they open it the next day after a doji. So if they open it lower after a doji in the overbought condition and that far away from the T-line, the probabilities are pretty strong that it's time to take some profits. Now, this is also part of my, I don't want to say, strategism of getting the emotions out of your trading. I was the worst investor in the world because I did everything on an emotional basis. If I had a big profit move, I would hate to take profits when it looked like it was time to take profits because, boy, what would happen if I got out of this position and this was the Dell of our lifetime and this one just kept skyrocketing without me. At least now I know what the probabilities are of when to get out of a trade because I know what type of patterns will tell me to get right back into a trade. So it takes the emotions out of our trading. Now, it also allows us to tell us what to do when we hit resistance levels. Here's our T-line crunch. Notice how the T-line keeps pushing this price back up through the resistance level and creates the next wave of our J-hook pattern. So it allows us to decide if we came out here to get back in here. I have no qualms anymore of buying, selling, and buying back at a higher price, knowing that that higher price was telling me we were moving in the right direction. It used to be, boy, I would look stupid if I sold here and bought back here and it turned right around and I lost money again or had to come out of it again. Now I know at least what the patterns are telling me as far as which direction or how far that price is going to go. The audio is going in and out. Is that happening to everybody? All right. Audio great? All right. That's just the sound of my voice coming across. I could have been a BBC. So it boils down to very simple setups. If we see a left-right combo, if we see a doji sandwich, if we see a T-line crunch, we see a failure, profit taking at a resistance level, as long as it doesn't close below the T-line, we can stay long. It just keeps us in the right place at the right time. And in any trend, there's going to be some selling. What we have to decipher is that selling a reversal of our trend, or is that just profit taking in our trend? And that's where the T-line becomes a very effective tool. And it also helps when you're identifying the patterns and whether it's time to get into those patterns or not. Now, as I mentioned, we have 50 or 60 candlestick signals, but we only need to learn 12, 6 long and 6 short positions. My stochastics are 12-3-3, nothing set in stone. Some people like 14-5-5 for longer term. When I was trading E-minis, I would use a combination of 12-3-3 and 5-2-2. The 5-2-2 would get me in and out of trades, but the 12-3-3 would tell me whether the trend was still long or short. Good talk, a little slower. Oh, okay. All right, William. Sometimes I get excited, so I talk slower. So anyways, 12 major signals. And there's about 6 or 7 patterns. And as long as you understand the different ramifications of the indicators to tell you whether a pattern is working, and for example, a fry pan bottom is just a lousy, slow-moving trading pattern. You couldn't trade it if you wanted to until it comes out the other side and breaks out. Now, we can add things to that. If we see a fry pan bottom and a breakout, how long do we stay long? As long as it stays above the T-line until it gets to the point where we start putting our stops when we're too far away from the T-line. Conversely, if you see a bearish pattern, the dumpling top, when do we start going short? When we start seeing sell signals and a close below the T-line, we know when we're in a downtrend until we see a candlestick buy signal and a close back up above the T-line. So this, again, is not rocket science. This is just putting the probabilities of visual elements into our analysis. Now, the T-line, let's go back a step. The signals themselves are the graphic depiction of what's going on in investor sentiment. That's the most reliable, technique as far as showing what a price move is going to do, as I've found in the last 40 years of trading. The T-line is something these other moving averages can act as magnet because everybody's going to see what happens when it moves to those levels. Nobody uses the T-line. So when the T-line is working effectively, which it does very well, it's because that's a human nature type support and resistance level, basically boiling down to that's somewhat like a Fibonacci number, a natural number. So when we're putting a human nature natural number with human nature graphic depictions of what's going on, that becomes a very powerful combination of being in the right trade at the right time. The Ichikomi is I'm thinking of the Heikidashi. The cloud is a good, effective indication of where the price might move. The nice thing about candlestick signals is we know they worked, or they wouldn't be around after 400 years. So that means if we use that as our basis, you can start adding other techniques or other indicators to your chart to see if that improves the probabilities of what's going on in the chart patterns. So, for example, when we can add everything we know visually is going on, for example, there's our fry pan bottom. There's our T-line crunch. What do we know about a T-line crunch? It pushes us up through a resistance level. And once it goes through the resistance level, it acts as our support for the trend and for identifying J-hook patterns. As long as we can't close below the T-line, we can stay long. Can you explain the T-line crunch characteristics? It's just telling you that when the T-line is pushing up toward a resistance level, if they can't close the price below that level, that means that price is going to push up through and create a very strong price move coming out of that resistance level. Dexter, yes, we did have that illustration. That's the dumpling top. That's the slow curve to the downside, and when it closes below the T-line, it's time to go short. So the expectation of a dumpling top result is an extremely strong downtrend, whereas the expectation bottom is a very strong uptrend. Also, let me see if I've got all of them here. All right. Also, we've got the slow curve, which is kind of a derivative of the fry pan bottom. The only difference is it doesn't usually occur at the bottom. It usually occurs when the price trend's already starting up. But notice what it did. It came back up. You had kind of a T-line crunch pushing you through this level, creating this strong breakout situation. And when you have a J-hook pattern, our prerequisite for a J-hook is a very strong price move, and then the pullback. And this is where candlestick analysis becomes very effective, showing if we know what the characteristic is of each signal. For example, indecisive signals like dojis, spinning tops, inverted hammers, that tells us there's indecision, that we start watching for this, and we know the characteristic of a J-hook pattern is that this wave right here will be the equivalent of this wave right here. So if we're up here, we're starting to take profits, we know that we can get back in because this trend isn't reversing, it was just resting. And notice what the resting period was like. There was no decisive selling here. It was all dojis. That told you there was very indecisive. That told us to be prepared for this next pattern to the upside. There's that fry pan bottom, or in this case the slow curve, closed back up above the T-line with a bullish engulfing signal, a doji sandwich, which is another high profit trade setup, and then we know what the characteristic or the result of a doji sandwich is, more upside. So if we know there's more upside, we can be buying either at the doji sandwich or at this breakout point because we know there's more upside after a doji sandwich. And if there's more upside that broke through here, that tells us now we're in a J-hook pattern. There's still going to be more upside to this trend. So if we add signal enhancements to our basic signals like the doji, our best friend is a doji in the oversold area followed by a gap up. That tells you not only was there indecision down here, but they were very decisive of what they did after that indecision, which usually leads to a very strong price move. We've got the formulas for finding those, and it's very simple. Once you put the formulas into your scanning software, it's just updating it every day to see which charts are setting up like that. Left-right combo is a doji followed by a bullish engulfing signal. A doji followed by a bullish engulfing signal. And then a gap up through a resistance level, staying above the T-line, just makes knowing when to stay in a trade, especially this alerts you not only that the uptrend is going to be strong, we can analyze the direction of the market just as easy as we can analyze individual stock prices. So if we know we're in an uptrend, we also know that all boats rise in a rising tide. But if we can find the boats that we know are going to rise a lot faster, that way we can take advantage and be more profitable trading when the market's heading up, and more profitable trading by finding those strong sell signals when the market's heading down. So not only do we have a left-right combo on the buy side, but we have a left-right combo on the sell side, telling us that this uptrend's over. And then right behind it, a doji sandwich that closes below the T-line. That tells us with a high probability we're in a downtrend. Signals and gaps. We see a signal. We know the bullish harami, which is one of the 12 major signals, tells us the selling has stopped. If we see them gapping it up the next day, not only does that tell us the selling has stopped, but they're buying with great enthusiasm, and that's exactly where we want to be, is a signal that tells us there's no more selling, and then a gap up telling there's extremely strong buying. Now, there's a lot of people who say, shoot, I don't want to buy a stock that's already up 3, 5, 10, 15, 20, 40, 80%. You do if it's coming after a candlestick signal. I hear so often people say, yeah, this is up. I'm going to just wait for it to pull back so I can get in. That's got to be the most backward logic, because if they're pulling it back, what's that telling you? That's telling you the bulls don't have a whole lot of control. The bears are still in control, and you're about ready to buy a stock where the bears are in control. And what you're hoping for is your immaculate execution, I guess, that when you decide it's pulled back enough and you buy, that's where it's going to turn around and go back up. I would rather buy when the signals tell me the bulls are taking control. I'd rather buy into that strength knowing I was moving in the right direction. I'd rather buy knowing that if the T-line crunch, the buy signals, which is all visual, and a breakout through a downtrending resistance level, I know that I can stay in this position as long as I don't see a sell signal and a close back below the T-line. If I can see buy signals, like a kicker type signal, we have very simple rules. The rule of the doji is it's going to move in the direction of how they open it after a doji. So if I can see a T-line crunch, I know the expectations are that they should be moving positive. If I can see a doji right on a resistance level, I know very simply they're going to move it in the direction of how they open it the next day. If they open it positive, I know the probabilities are extremely strong. They're going up further. I get in immediately. A lot of people say, well, every time I get in, it goes the opposite direction. The probabilities with candlesticks is even if that happens, more than likely the chart pattern has already told you you're in an uptrend. You just happen to hit it at maybe not the correct time, but you're still going to be in an uptrend. If you see that series of dojis, it's telling you something. There's lots of indecision. When you see that gap up, this was a very simple trade. You buy on positive trading. You've got a T-line crunch pushing you right up through the 50. You've got a T-line crunch. They couldn't close it back below this level. They couldn't close it back below this level even after they hit the 200. They just kept crunching you right up through those resistance levels, making it very simple to be stay long. And stay long without losing sleep at night. I was talking to an investor today that was complaining that he couldn't make money because he did the same thing that I used to do. Because it was so hard for me to get into a profitable trade that when I got into a profitable trade, my biggest fear was that it would go negative on me. I would close out the position with a small profit, even though that trend could have gone up for much longer. The other side is you buy something and it keeps going down. What's our first inclination? Boy, if that goes back up to where I bought it, I want to get out. So you keep holding it until you're down so far you just say, I can't stand it anymore, get me out of this trade. Well, that's called eating like a bird and pooping like an elephant. It's exactly backwards of what you should be doing. The candlestick signals and the confirming indicators allow you to get in, especially at times when everybody else is negative on something. You always have to ask yourself a question. If there's a buy signal when everybody else is negative, who the heck is buying? It's usually the smart money. Yes, this works just as well for Forex as it does for bonds, stocks, and as I say, even tulip bulbs if you're trading tulip bulbs. So again, moving average truisms can be seen. But if the moving average has been acting as support is being breached, it will be seeing if they act as resistance. So if you fall through a support, they'll come up, test it, see if it's going to act as resistance. Or, on the other hand, if they go through the second time, then they come back and see if it's going to act as support. We can see very quickly and visually what they're doing at those levels. So support and resistance levels we can see in trend channels when it's time to be out, when it's time to be back in, and when that trend channel is completely obliterated. If we're buying based on a fry pan bottom, T-line crunch, doji, bullish confirmation, stochastics are now in an overbought condition, but we can be buying because we know what's going to happen after a fry pan bottom breakout. There's going to be a very strong price move. So this, again, is just taking the elements that we know, that the T-line acts as support. The candlestick signals tell us what type of trading is going on. Notice in this pullback, there was no real convincing selling. It was all dojis until we get down here and do a left-right combo, right back up again. So even if we took profits over here, we're not throwing this chart away. We're watching to see when they're going to reverse it and get right back into the trade. So this was all kind of a cliff note, quick session to kind of lead into what Jeff is going to show us. But Metastock has some very good, excellent search tools. They work just as well if you're doing an analysis of a market trend. We can see what the Dow is doing right now. We have that little T-line crunch pushing the Dow up toward this resistance level, which indicates that we want to stay long as it stays above the T-line. So using the scanning techniques, we're looking for the scanning basics, which is we're looking for buy signals in the oversold condition. That's our basic. Now we can, and we also can look for sell signals in the overbought condition. We can now add some confirmation to that, where we're not only finding the buy signals, but the stronger buy signals, the support levels, the breaking of a downtrend by closing above the T-line. The more elements that we can put into our analysis, the higher the probabilities we're going to be in the right trade at the right time. Left-right combo, right on the 50-day moving average, a gap up after a left-right combo. That in itself is strong. The fact that they close it above the T-line, and then notice we have a T-line crunch going right up into the 200. We just stay long. This is, again, putting the visual analysis of what happens with human nature right in front of us. So when I first started using candlesticks, because I knew I was smarter than everybody else, before candlesticks came along, I figured every time I put on a trade, it should go positive because of my great intelligence as far as analyzing a market trend. And when it didn't do what I expected it to do, it's because everybody that wasn't as smart as me didn't really see what the logic was for buying yet. So I just wait until they caught on. But the most important factor about the market is the market doesn't care what you think. The market is going to do what it's going to do. So if I can put on trades where I expect 70% of my trades to be winners, which is extremely high ratio, but the more elements that we can put in to our analysis, the higher the probability we're going to be in the correct trade at the correct time. But fortunately, with candlestick analysis, we also know that if there's 70% winners, there's 30% losers, and candlesticks provide a format for getting us out of trades that aren't working, so we can move on to the trades that are working. Again, going back to the old adage of cut your losses short and let your profits run. In most cases, most money managers don't tell you how to cut your losses short and let your profits run. Candlestick signals have some very simple techniques. Using Metastock scans with all the elements they have, if we can use that to where we start when we're using Metastock scanning applications, where we can now take it down to 28.2% losers or 29.1 or 27.3. Every time we figure out something that's going to create a better, signify your returns immensely over the long term. Let's see, I'll answer a few quick questions, and then we got Jeff going to come on and show some of the products they've got to make these assessments very easy. Does the length of the body of a doji matter if you read it? No, it's still a long-legged doji. Obviously, is a big price move during the day. It closes at the same level it opened, which is probably more an indication there was a big indecision between the bulls and the bears. What's the best way to tell if a change in price direction is a reversal or a retracement before losing money? Again, Steve, that's where you're using the techniques of if you see a sell signal and it doesn't close below the T line, you're still in an uptrend. So that's why I always say when it's time to sell, it's when you see a candlestick sell signal and a close below the T line. That combination will keep you into trades that even though there's some selling, it won't get you out of the trade. You say to enter your trades on a 10-minute chart. Would you show us how to do that when the 10-minute chart is not consistent with a daily open? Earl, that's a whole nother session. We'll do that here pretty soon in the members area on a Tuesday or Wednesday night. I understand you use the T-line on the daily charts. What do you use on hourly? Same thing. Every chart that you saw could have been a minute chart, a monthly chart, or a daily chart. Candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. So they are effective on all charts. We also have the factor of what we call the 3T line, which is a 3 exponential moving average. And that in combination with the 8 gives you much more refined entry and exit strategies. But again, that's a whole session in itself. So with that, I'm going to let Jeff Gibby come on and let him show you some of the techniques and some of the applications that Metastock can dramatically improve finding the right trades and maintaining those right trades. So with that, Jeff, I'm going to log off and let you log on your charts.
Okay, hello everybody on CL Colgate for you, okay? Let's go ahead and share the monitor real quick. I'm just going to lay out a few examples and kind of show you how to set up the scanning with Steve. And so just give me a second. I'm going to go ahead and share my monitor right here. Okay, I do have to read this out loud and verbatim. So let's go ahead and start with that. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Okay, got that out of the way. Thanks for coming, everybody. It's really, really good to be here. Now that I've read the legal disclaimer, I'll just make sure everybody can hear me okay. Oh, here, let's try the screen share again. I haven't shared anything too important. Okay, now it blinked quite a bit. You should see a slide that says Metastock Heritage now. Can you see that?
Yep, there it is. Yep.
All right, very good. If you guys want to go back, I can go back one screen and we can read the legal disclaimer again, but I think we'll skip it for today. I want to tell you a little bit, just a little bit about me. I know all of you guys are familiar with Steve. Some of you may know about me and may not know about me or kind of who I am. I've been working for Metastock now for the better part of, I think, 17 years if I did the math, and it's a very enjoyable job. I'm in charge of, I'm a business development manager, so I'm in charge of recruiting partners to work with us, and that's been a lot of fun. It's taken me all over the world. Been to Egypt, Saudi Arabia, seen probably 3 or 4 natural wonders on Metastock over the years. But one of the things that I really like to do is I like to partner with people that I respect and that I know have a really good method of looking in the market. And that's really kind of the genesis of the relationship we started with Steve. I ended up just calling Steve out of the blue one day, talked to him quite a bit, and we kind of decided to go about a process of creating his indicators and particularly the patterns that he likes to look for in Metastock. And it was quite a fun process. It took us all in all a couple of years to accomplish everything. As you know, as most of you probably know, Steve's patterns are very visual, which makes them very easy to spot and identify on the on the charts when you're looking at them, but as a computer, that's very, very hard to kind of program out. And so for the better part of, I would say, a couple years, it was Steve kind of defining the patterns for us, and then we would come back with the patterns with Steve and say, does this look like a good fry pan bottom to you? And he'd be like, well, yeah, these two look good, but this one isn't because of this and this and this. And so we'd go and refine the code, and then we'd send him another list. And William and I think my programmer, Steve and my programmer, William, I think became very, very good friends over the course of those 2 years, because there was a lot involved in kind of making sure everything was absolutely perfect and correct. And so I did put this screen about Metastock up. I'm not going to read it, but just in case you're not familiar with the brand Metastock and kind of like what we're doing, we've been actually, for this year, we've been rated #1 in terms of software for doing kind of the stuff we're going to be showing you 24 years in a row. So great brand name, a company that's always rated #1 in the an A+ rating in the Better Business Bureau and stuff like that. So today, really, what I want to show you is how you would use Steve Bigelow's candle profit system to determine kind of the patterns and see what kind of stocks you might want to look at and that kind of stuff. The end result of our couple years of working with Steve was we really took 20 of his patterns that he likes to use in trading, and we coded those up into cost. Okay, am I back on? Yeah, I got a little note that said I was lost.
Yeah, Jeff, we've lost your screen.
Okay, I can share that again. No problem. How long was I out there, Steve?
Oh, just about 5 seconds.
Okay, I can go back 5 seconds to you. Okay.
There you go. All right. Yep.
Just in case you didn't see the pretty box, I want to show the pretty box because our graphic designer put it together. Anyway, so the end result of all this work between William and Steve over the course of a couple of years is what we really got was a very refined pattern analysis that will show the fry pan and the bolt belt holds and the dumpling tops. And here's a list of all the patterns. I'm certainly not going to read them out loud, but we've got a full integration into kind of what Metastock is. And what I'm going to do by integration. So I'm going to kind of go ahead and get out of the PowerPoint for a minute, and we'll look at CL because somebody asked how it would work on Colgate, and I'll show you kind of how that would look in terms of you as an end customer. So the first thing I've got here, let me just go ahead and swap into Metastock. I'll give a second for the screen to update for everybody. And this is just Colgate, something somebody randomly just asked for. And what I've got is I've got all of his indicators already preloaded. When you get CPS, this will preload your indicators for you. So I've got my stochastics down at the bottom. I've got all the moving averages and the T-line and the 3T line already up. And then what you'll notice is we're identifying where these particular patterns happen on a chart. Here we have the series of doji, the T-line crunch, the left-right bullish, the slow curve. So in a nutshell, this is going to be kind of your view of the market. And what the expert advisor here is actually just kind of identifying where these actually happen on the chart. I'd say particularly lately it's had a really good batting average. The other thing that we did as part of this expert advisor is we tried to give you something that would help you understand the patterns. And so especially those of you that are not as familiar as you should be with Steve's patterns can understand exactly what we're looking for in that visual pattern and understand how you would look to select this as a trade or not select it as a trade, as well as how you would implement it in terms of a strategy. So let me show you how that works. What I'm going to do here is I'm going to right-click on my chart, and I'm going to open up what we call our commentary window. And I just come down to Expert Advisor. I go to the commentary, and that's going to load this little window up on the bar. Now you'll notice this triangle actually forms, and this is the day that we're doing the analysis. So right now there's not really a pattern here, so we just have some generic text that talks a little bit about how cool Steve is, what candlestick form is, and kind of just a little bit of an overview of the system. But if I was to move this back in time a little bit, I could come back to, and I could highlight on this, let's say this T-line crunch right here. And now that arrow is going to move, and it's basically going to tell me that this is the day that we're analyzing. So if we were looking at this back on March 6th, this is the text we'd actually be reading for that particular day. And what we're going to do, what we did here is we defined the pattern. So the T-line crunch is a trend line. Traders can take advantage of long positions after the profits takes breaking prices back to touching the uptrend. So it's saying to take a long position. And if it ever exits below the T-line, or this 8 exponential moving average, that's when you're going to get out. So we're trying to get very specific about what you do with the stock. In this case, you're going to buy it. And particularly tell you how to get out of the stock. In this particular instance, you're going to exit on a close below the T-line. In this particular example, we tell you exactly what's creating this, what we're looking for, what we're scanning for as part of that price movement. And in a lot of cases, I'm going to move to this left-right bullish combo. So I'll just click on this, and my triangle is going to move to this day. We'll have a lot of text here. Again, it's telling you exactly what it's doing, what you should do with it, how you should get out of the trade. But what we've created are also enhancements, because a lot of times with Metastock, and I'm going to show scanning to you tonight, but with Metastock you're going to have quite a few signals that come back. And what you're going to want to do is you're going to want to have a way to analyze which ones you like the best. And you can do that in a number of ways. You might prefer one particular pattern over another. Or you may have quite a few of one certain pattern, and you may look for these enhancements to kind of help you decide which ones you want to get in. In this particular case, it says the bigger the bullish engulfing signal, the more powerful the new uptrend will be. It also says if the signal occurs at a major technical level, like a moving average or a trend line or Fibonacci number, the more powerful your following uptrend is going to be. So we tried to give a lot of advice with our commentary to tell you exactly how Steve would recommend you would take this trade and how you can select between the different opportunities as they become available. And we spent a lot of time on that. Steve was very, very helpful in coming up with some things that we worked with, and then we put together a pretty good package around it. I'll just say it that way. Victor, I'll take a couple questions, and then I'm going to show you scanning. Victor asks, can the program send an email alert? Absolutely, yeah. You can actually. Now, what you can do is you can actually, if we were looking at this on real time, for example, we were looking at it like a 30-minute chart, if a pattern occurred, you would need to go into the program and set up your email address. And it won't take very long. I'll just show you how to do that. You'll go Tools, and it's right here under Options. And under Alerts, you just click on this that says Allow Email Alerts, and you just type in your email address that you want it to be delivered to. That's all you really have to do, and then that'll send you an email if that happens. And you also do need, I think, a MAPI-compliant email program, which I think Outlook would qualify for that. It won't work with like a Gmail type of a program, as far as I know. Our support guys might be able to help you figure something else out if that's what you're using. Okay, so let me now kind of transition a little bit and to show you how to set up the scanning or how to run the scanning in Metastock. It's very, very easy. The first time you open up Metastock, it's going to show this Power Users console. So, and here we have the option to look at charts. We can use an exploration, which basically is our term that we use for scanning. We call it an exploration. There's system testing, and there's also forecasting. For today, I'm primarily going to focus on scanning and charts and show you how those work. Now, since I've got CPS installed, I've actually got these broken up into pattern scans. Since there's 20 of them, we broke them up into 4 different categories. So right here, if I ran this Doji Dynamite scan, the scans that it would be looking for are like Doji at the top, the Doji Best Friend, the left-right bullish, the left-right bearish, the series of Doji bullish, and the series of Doji bearish. The other pattern scans that we have are the J-hook patterns, the power signals. You just select the ones and the price pattern signals. Margie, you can sound alert when the T-line crosses. That would take a little bit of custom coding, but it wouldn't be very hard to do, and I could help you set that up, or I could have one of our guys help you set that up for it. So basically what you're going to do, I also have these bonus scans here, CPS bonus universe and CPS bonus universe oversold. And these scans are not actually included in the actual package. But when Steve and I started working after, we kind of defined a couple of universe scans that people can use. So what this one is going to do is this is one that's actually a pre-filter condition. It's going to look for stocks that have an average volume of at least 200,000 shares, with stochastics above 20 and the price above 5. There's also another one that is just called a universe, which looks for everything but the stochastics being oversold. These we didn't include with the package because we developed them afterwards, but I'm going to include them for anybody that actually gets CPS so that you'll have these universe scans. What those allow you to do is actually create a universe that you can scan on a daily basis. So for example, what you would do here on this particular screen is you just select Explore, like we were talking about a second ago. You'd select the scan that you want to run, whether that's price patterns or power signals. And you just click on this button that says Next. Okay. And what I'm going to do here is I've created lists. This is the oversold list, and this is the entire universe scan. I just select the scan that I want to run it against. Now, we do cover, at Metastock, we cover 182 global exchanges. We have Forex, we have ETFs, we have just about anything that you're going to be interested in. So you can select any of the lists that are available. Right now I've got loaded the North American list. So if you want to scan NASDAQ or over-the-counter stocks, or even looking at it from a sector approach, you would just select the actual list that you want to scan against. I also have the Dow Jones and the S&P 100 loaded here. Okay, I think this particular page I actually can't resize. So, but that's okay. What I'm going to do here is I'll select the entire universe page. I'll go ahead and you just click on Next, and it's going to run that scan. Now, it took about 2.5 minutes for me to scan those 2,700 instruments, and that's really not too long. We could run that here in the scan, but to save a little bit of time, I'm just going to go straight to the report and show you exactly what it actually shows you in that particular report. So here I'm going to actually come back. I did the power signal scan a little bit earlier. I'm going to go ahead and click on this report, and I can blow this one up fairly large. So I'll make this full screen for you guys. And right here, out of the 2,600, you'll notice there's about 30 that actually met one of those patterns. And up here in the top, it's going to say basically, if you have a 1 in the column, this is going to be true. So this is the bearish flutter kick. If I was looking for a bearish flutter kick pattern, I just sort it so that the 1 is at the very top. In this particular case, our bearish flutter kick was this company called Select Income REIT, which sounds like a real estate income trust to me. And so we could go ahead and open that chart and take a look at that. Here we've got the bearish kicks. Again, I just sort on the thing, and there was 3 of those. We have the bullish flutter kicks, and there's 2 of those, Westlake and Cigna Corporation. And we have the bullish kicker, which is going to be quite a number of these. I'm going to look at the bullish flutter kick. I'm a little bit bullish right now in terms of the market in general. Probably wrong, but here we've got 2 that we can look at. And I can just literally, just from this report, after we've run it, I can open up the chart. And what is going to show up for me is that chart with the pattern, with the commentary, and all that stuff ready to look at. So I'll go ahead and close this down. Right now, this is Cigna Corp. Right here, we've got the bullish flutter kick. We've got all the commentary and the specific criteria and what you should do with it, and whether or not there's an enhancement to look for. And I would say that and is top on. You know, I look at kind of the patterns that have shown up on this chart. We've got the J-hook here, the T-line crunch, the doji best friend. That was an awesome doji best friend. So it's really, it's something that we work quite hard on. It's a very, very simple to use system though, and we kind of spent a lot of time making sure that it was very, very easy for you to implement in the trading that you're doing. Joe asked a very good question. Are the kicker and the flutter kick different? I believe so, but Steve would have. It's been 6 months since I helped kind of put all the specifications together and all that kind of stuff. So you're really probably Steve would be able to give a better answer on that particular one. I could look at it. Let's see. Joanne says, can we copy and tweak the formulas for the CPS scans? Yes. Once you buy them, you own them. Actually, with this particular one, even though we have the ability to lock down the code and not let you see what we're doing, Steve said, well, I was having this very conversation with Steve, like I do with a lot of with everybody. And I'm like, do you want to keep this open, or do you want to make it available so people can see exactly what we're doing with the math? And his option was to leave it open so that if you want to go in there and actually design or tweak it and that kind of stuff, you can. Now, I would recommend that you make a copy of it and then tweak it so that you always have your default version and don't have to go download and install it again. But you can absolutely see exactly what's happening under the curtain, or behind the curtain, as they say, in this particular scan. And then Bayou answered the question on the Flutter Kicker. Flutter Kicker has the doji in the middle. Margie Lund says, does it give a doji best friend going short? I can tell you that in a second, actually. Let me look here. That's a really good question, and I know where to get the answer. So right here, these are, I don't know, I think it's a bullish pattern. And I could be wrong on that. I'm just looking for the, trying to give you an answer. Let's go to symbols here. There's your long doji best friend. And I don't think there's a bullish counterpart. There isn't. So it's a long pattern. This is designed for Metastock. This is Metastock. We spent 2 years developing it, so it works in Metastock. David, you could actually perform a backtest using the different patterns and stuff like that. You would need to define the patterns that you want and take the code and copy them and put in exit criteria as part of it. It will work on intraday charts. So a lot of people have asked whether or not they can look at it on a 60 or to see an intraday chart. So let me do that for you. To do that in Metastock, just click on the D right here. Go on 30-minute or 10-minute or 5-minute or 1 minute or whatever you want. If it's a 3-minute, you can do that. Here's how it would look on a 30-minute chart. It's going to look very, very similar when the data comes in. You're going to see similar patterns. They're just going to be shorter term in nature. If the data comes in. Sometimes it gets a little bit slowed down when we're sharing. So right here you see your left-right combo just happened at 11 a.m. today. There's a doji best friend. So yeah, it works technically, and I would recommend, we give you a money-back guarantee on this and a free trial for Metastock. So I would recommend, of course, that you play with it and just see how well you like it on an intraday chart. My experience with it has been primarily on a daily chart. You can also come in here to a weekly chart. We had the request to see it on a weekly chart, and you'll see it looks very, very clean and very, very similar to that on a weekly chart. Charles asked, will this add-on work in Metastock 11? And no, actually, the reason for that is we specifically use technology that's in Metastock 13. And 12. So it'll work on 12 or 13. Lennon asked, does this work on futures, Forex, and ETFs? Yes. We have 182 exchanges that we power in our data link and our Metastock Xena servers. So if we don't have the data for it, you that particular instrument. And I say that kind of jokingly, but the only exchange that I've come across that we don't have is the Caribbean exchange. I'm trying to think of it offhand, but it had 56 issues on it, and Reuters didn't offer it for some reason. Ron asked, can the scan work on a customized list, one that you create yourself? Absolutely. You can set up, these are the 30 stocks that I want to trade, or these are the 30 ETFs that I want to trade. You can set that up in Metastock and just run that scan every day if you want. That's easy to do. Joseph asked, can I upgrade my Metastock? Absolutely, you can upgrade your Metastock. And there are different ways to do that. I'd probably recommend you call one of our sales guys tomorrow, and I have that phone number in just a second, because the upgrade pricing is very, very cheap. Charles asked, can you have 2 or 3 meta windows open at the same time? Yes, you can have 2 or 3 different charts open in the same time. I'll say it that way. Metastock includes a feed. So when you subscribe to Metastock, you'll have a data feed with it, Leonard. Carl says, can I check out the PE ratio? Yeah, absolutely. You can do that. If you have Metastock end of day, what you'll do is you'll right-click on your chart, and you go to Research and Quotes, and you'll have a fundamental option here that you can just go into. I usually cover that in our longer presentation where we talk about Metastock, but I really wanted to narrow it down and talk about Steve today. What's the offer for tonight's webinar? I'm glad you asked. Let's go back into the PowerPoint, and we'll just recap real quick. It's a great offer, and I'm even going to include those bonus scans that Steve and I developed if you order right away. So we talked about the floor expirations. We talked about this. This is really kind of a brief that I put together. But to recap what you're getting, in this particular case, you're going to get 4 explorations with all of the 20 different price patterns. You're going to get the expert advisor, and the expert advisor is really what identifies and labels all those patterns with you on the charts that we kind of had laid out there. Here they are again for you. And one of the things I'm going to do is those bonus pre-filter, those market explorations that we put together with Steve a little bit earlier, I'm going to email those to you separately if you order sometime today or tomorrow. So when or over the weekend, because on Monday I'll basically pull the list and I'll send a separate install file that'll have those 2 bonus scans for you. Normally, now I want to stress this because this question came up last time, but it's a one-time cost. Somebody was like, is it $3.99 a month? No, it's very cheap. I normally charge $399 for it. As part of this webinar, we're going to give it to you for $299. And I know a lot of you don't have access to Metastock or may not have Metastock yet. And what we're going to do as part of that was we'll actually give you a free trial to Metastock or Metastock Pro for 30 days. We'll give you a 30-day. After your 30 days, the prices for that start at $59 a month. So it's very, very affordable. We'll also give you a 30-day money-back guarantee, and of course those 2 bonus pre-filter explorations if you order. It says by Friday, but I'm going to pull the list on Monday, so you have over the weekend to do it. You can do that at metastock.com/candlestickforum-A. That's a good place to actually go in and get it. Let me come back and see if there's any questions that I can answer real quick for you guys. A question came in from Karen. Does Metastock work on pre-market and starting at what time? It depends on the symbols that you're looking at. I'd recommend that you call in and kind of talk exactly, because I'm not as familiar with the pre-market and post-market stuff and the coverage as maybe I should be. Yes, to answer your question, DR, the 8.1 issue is resolved. It's everything's fine with that. Joe Trader, there will be a recording, and we'll be sending it out to you in the morning. Frank says Metastock is an outstanding platform, and the sales and support staff are excellent. Thank you, Frank. Frank's been a friend of Metastock for a long time. I've known Frank. I don't remember the first time I talked to Frank, but I know he's been with Metastock probably longer than I have, and that's saying a lot. Gregory says, will end-of-day work with Candlestick Profit System? Yes, absolutely. Marvin asks, will it work on a Mac? And that's a really good question. Not natively. It is a Windows-based product. We do have customers that install Metastock using Windows on a Mac, but we recommend Boot Camp or Parallels for that. I'm not even going to try and pronounce your name, but there's a question in here. I was going to try it, and I realized I was going to fail badly at it. But is there a list of all of the optional stocks in Metastock? And I'll show that to you real quick. Right here. I've got it right at the top, U.S. optional stocks. I didn't make this list. It's a list that's available in Metastock. The other thing that's really cool is we still, out of habit, call it Metastock end of day, but with Metastock 13 we just included hourly updates. So in Metastock you can actually go in and see what the current market is doing, even if you're just on Metastock end of day. So the end of day is maybe a naming convention we need to stop using. So, Maria Alexander says there's a one-time cost, but then to use Metastock, one must pay $59 a month. Metastock costs $59 a month. The CPS is only a one-time cost, and that's what you'd pay $299 for. Good question. Jack C says, what is the difference between Metastock and Metastock Pro? The difference is one's full on real time, and one of them offers hourly updates on a daily bar. And Metastock Pro would be the full real-time version. Actually, there's a question in here, Metastock 13 work with TC2000 data? It will, but it still requires data from Reuters Data Link. Doug says, I already bought CPS. Can I have the 2 bonus scans? Not 4, 2 bonus scans. Of course. I'm not going to say no to that. So, but what I'll need you to do is I'll need you to email me so that I don't forget. And just drop me a message right there. If you have any questions, feel free to email me. I'll answer you as soon as I can, which will probably be tomorrow. Do you have the links for the symbols with Reuters? The monthly cost for Metastock Pro, it starts at $150 a month. Randolph says, what is a Zenith product? Zenith is a very cool product that we've white labeled that Reuters developed. It's their flagship product. They've spent roughly about $1 billion on it, and it allows you to see real-time news. It allows you to see real-time data from all kinds of different exchanges. It allows you to go, it's a whole webinar topic in and of itself, but it allows you to even go in and see like how Facebook is twittering and see research, and there's a ton of really cool functionality in Zenith that revolves around being able to find stocks, see what news is doing, see what economics do. I could answer that question for about an hour. It's a very, very cool platform that is a very institutional grade platform. I've had people cancel a Bloomberg subscription, which is $2,000 a month, and go with the Zenith platform for that data. Yeah, you can see that, Eric, in Zenith, absolutely. You can see what advances are happening and that kind of stuff in Zenith fairly easily. So, looks like I'm over time a little bit. So I'm going to go ahead and put back up this last page of the slideshow, and so you guys have the information on how to take advantage of the offer. Try it out. It's been one. I'm very proud of it. We spent 2 years working on this thing with Steve Bigelow, and it's been one of a very popular add-on. Sales have been tremendous on it, and they are only getting better. So people really like it. We've had very, very good feedback. Try it out. We'll offer you a 30-day money-back guarantee. I appreciate your time. Andy asked, can you show Zenith? Andy, drop me an email, and I will send you a legitimate Zenith video, one that really goes in and talks more about Zenith and kind of gives you, we're recording a lot of more new content right now for Zenith, and I'll send you a really good overview video instead of kind of giving you a really kind of, let's say, 3-minute demo. Okay? All right, guys. If you want to order it now, Joseph, just go to metastock.com/candlestickforuma. All right. Thanks, guys. I appreciate your time. Thanks for coming in tonight. And we'll see you next time.
Thank you, Jeff. Thank you, everybody. Everybody have a good evening. We'll see you in the chat rooms.